Welcome back to Quantreef.com. Sol sitting right at 74.17, parked between a couple of tight liquidity walls that make this a genuinely interesting spot to break down. Today we'll walk through liquidity, support and resistance, VWAP, Fibonacci, fair value gaps, positioning, and where the path likely leads over the next several hours. Let's get into the chart. Price is trading at 74.17, sitting just above the Fib .382 support around 73.71. Momentum here reads pretty neutral. The trend and structure score is a moderate 64, and volatility is actually on the low side at 43, which tells you we're coiling rather than trending. Neither buyers nor sellers have decisively taken control yet. It's more of a range-bound tug-of-war right beneath resistance. Price is hovering just above session VWAP at 73.70, and also above both anchored VWAPs from the recent swing at 73.72 and 73.53. That clustering of all three VWAPs so close together tells you value is compressed right under current price, a decent sign buyers are defending this zone, but it also means a clean break either way could move fast once one of these anchors gives. The liquidation map shows the bigger pool sitting to the downside near 72.97, holding about 63% of the imbalance, versus 37% stacked above near 74.94. That's a meaningful skew. There's more resting size below than above, which is often what pulls price down first before any real reversal, since markets tend to hunt the fatter pool. Still, the 74.94 wall above is the nearest magnet given it's just over 1% away, so a quick poke up there is entirely plausible before sellers reassert. Reading straight off the panel, resistance 1 sits at 75.27, then resistance 2 up at 77.08, and resistance 3 way up at 78.85. Below, support comes from the Fib .382 at 73.71, then the stop-loss level at 73.24. Given the downside pool is heavier, that support cluster looks more likely to get tested first, and stops are probably bunched just under 73.24, a clean break there invalidates the bullish red. Above price, there are two daily bearish gaps, one between 78.83 and 80 and 34, already over half filled, and revisited 77% of the time historically, so that's a real magnet if we ever stretch up there. A second one much higher near 87 to 88 is less relevant right now. Below, there's a bullish 4-hour gap from 72.81 to 73.23, already almost half filled, with an 87% revisit rate. That's the one most likely to get tagged again on any dip. The current swing runs from 71.92 up to 74.28, and price is sitting inside that range, close to the 1.272 extension near 74.92. That extension lines up almost exactly with the liquidation wall above, which makes it a level worth watching closely. If price respects it as resistance, that confluence adds weight to a fade there rather than a breakout. Layer scores mostly lean constructive but not overwhelming. Institutional positioning leads at 69.6, Fibonacci location scores 66.5, and volume comes in at 65, all suggesting decent underlying support. But statistical volatility is soft at 43.3 and macro regime is a flat 50, which is why the overall grade lands as neutral. When trend and positioning look healthier than volatility and macro, that's usually a sign the market's still deciding, not committing. Retail traders are 70% long here, and interestingly top accounts are even more long at 72.7%, with top positions at 64.9% long, so this isn't retail alone chasing it, larger accounts agree. But the 4-hour taker flow is almost dead even, 49.2% long versus 50.8% short, with about 584 million in long volume against 600 for million short. With everyone leaning long, a squeeze would most likely come from a downside flush shaking out that crowded long positioning. Given the heavier liquidity sits below at 72.97, holding 63% of the imbalance, that's the more probable draw first, especially with retail and top accounts both crowded long, which sets up nicely for a downside sweep to shake out that positioning before any real move up. If sellers get there and buyers defend, that bullish 4-hour gap near 73 area could fuel a bounce back towards 74.94 and even the Fib extension near there. If buyers fail and stops beneath 73.24 break, downside opens further. Remember, SOL largely takes its cues from Bitcoin's own liquidity structure, so any read here needs a check on how Bitcoin's own pools are positioned before leaning either way. The bullish case wants confirmation on a reclaim through 74.24 towards 74.94, with the long setup structured around 72.97 as entry and invalidation near 71.21, targeting up through 74.24, 74.36 and 74.94. The bearish case fades strength up near 74.94 with a stop at 76.74, but that side's target ladder isn't published this cycle, so we lean on the long structure for the ladder detail. Risk either way stays tight given how close these levels sit together. So we're really at a decision point, whichever side takes the next liquidity pool first, upside near 74.94 or downside near 72.97, likely sets the tone for the next rail move. If this kind of layered read helps, give the video a like and subscribe for more. Quantreef.com runs this same 9-layer structure, probability and liquidity breakdown across more than 100 coins, and there's a 7-day trial if you want to dig into it yourself. As always, this is for educational purposes only and isn't financial advice.